The 3-day chart for GTII could be giving us some very interesting clues. Let's go ahead and go over them now. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a GTII technicals, raw price action, and statistical thread of analysis on this Taco Tuesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, you guys, so yes, this is the infamous 3-day chart that I've actually talked about for a few months now, right? So what I want to point out is that the last time we actually got contraction from volatility to, from critical expansion to contraction, paired with an upside pivot on stochastic momentum, we got a pretty substantial upside, right? Starting from around down here, which is around the 45 cents zone, all the way up to this point here to around 292, I think it was, right? So upon that high, that was around a 400% move to the upside, or 500%. It was a huge move to the upside, right? So what I want to point out here is that the criteria for that back test was set upon creating a contraction phase from volatility paired with stochastic momentum. So anytime that volatility reaches the opposing critical zone, that's when the signal essentially matures, right? So in this case, you can see that from that last time, we have never reached that critical opposing zone. So in all technicalities, the play is still on, right? So what I want to point out here is actually, please notice here, stochastic momentum doing this number again from when we were talking about down here, right? Very, very similar situation there too. Okay, so let's go ahead and just kind of pivot this, zoom into this like this so that we can see what we're kind of dealing with here, right? So whenever we have that condition on volatility paired with stochastic momentum, that gives us a pretty strong move to the upside. So we can do this, right? Let me go ahead and draw something like this so that we can kind of understand or get an idea as to what we are currently looking for, right? So we're gonna make two trend lines here, just like this, and we're gonna do something like this, right? Let's just go ahead and get this as close as we can, just so that we can get a clear idea over what we're looking for, right? So what we want is a crossover from the shorter time frame. This is the EMA 3, right? The 3-day exponential moving average. So we'll go ahead and just make it orange, just so that we know that that's what we want, right? So, and then this one here, let's just make it a darker blue, and we'll go ahead and continue following this as the time kind of passes, right? So something like this is what we're looking for, right? So as soon as we do get both of the EMA 3 and the SMA 14 pivoted towards the upside, that would be when the continuation to the upside would happen, right? Or we can essentially reset the conditions. Okay, so let's go ahead and get out of this view here, because it's getting pretty close to that. But if I can be abundantly clear here, please notice that I am suggesting a continuation to the downside before a continuation to the upside, right? So if that's going to be the case, then yeah, we would actually have to look at, we would actually have to see about some lower targets from where we're currently sitting, around 99 cents, right? So another indication to tell us that there could be a continuation slightly to the downside is this. So on the 3-day chart, we have 20 hours and 4 minutes to close this, right? So very likely this is going to be showing us the effects by maybe Thursday or Friday over what happened in the price action, right? But what I'm talking about is an indication for a downside is this. Okay, we're getting dangerously close to printing bearish engulfing candle structure on a 3-day time frame. Okay, so that could lead us to a downside. And in fact, the downside I'm looking at is around 84 to 85 cents. Okay, so that would be particular to, I mean, it's the bottom side of a support, but there's a gap there, right? Right over here. Okay, so the top side of that support is around 86 cents, right? So it would be somewhere around that that we can use for some type of a bounce, right? So we can leave that there as a very important area of support, but there is still one more below that, okay, around 70 cents. But I'm not really looking at that right now because we do have a gap here, and those gaps usually work as a pretty nice area of support, right? But it really depends on what's happening here on that 3-day closure. We still have some time. We're not going to know anything until that closes. We won't know anything until that closes. Okay, you guys, so let's go ahead and continue on the analysis and see what else we have in store for GTII. Okay, so here's the 3-day Gaussian channel. And the reason why I'm bringing up the 3-day is because the buy daily is the price action is already kind of moving below the bottom support of the Gaussian channel, printing a bearish engulfing here. Okay, so now that forces me to move to the 3-day time frame to see what that support line can be for the Gaussian channel, right? So you can see down here that there is kind of a confluent level to what we were talking about. So 84.84, pretty much 85 cents. Is kind of near that candle bottom that we were talking about in the previous chart, right? So right around this area. Okay, so let me just go ahead and I can make an adjustment here, right? So that we can favor that 85.86, which is very confluent with the 2.272 Fibonacci ratio. Okay, you guys, so let's go ahead and move on and see what else we have, okay? So if I'm going to be honest here with you, I would, temporarily, right? I'm not wishing this for forever, but I would very honestly embrace the potential of a reaccumulation phase down here. And the reason why I'm saying that is because the moves that we have seen GTII do from these targets here, which is, I mean, we've drawn them, right? We've used them several times for these parabolic runs, right? So I would honestly encourage and embrace this drop here for a serious accumulation phase before a rip to the upside that can literally melt faces, right? So that would be incredibly ideal for us to face for reaccumulation, right? So another thing that I wanted to mention here, you guys, is on the buy daily chart. Yes, we are still within that falling wedge, right? But I want to show you this, okay? Because I'm noticing that there is this pattern happening here, which tends to be actually pretty I mean, it rhymes well with this right here, right? So if we move that wedge slightly to the downside like that, then that actually reveals where the wedge can end and also where we can look for a reaccumulation, right? So in this case, let's see, it would be something like, something like this. Now we kind of have like a true conclusion to the apex of the triangle. And if that's the case, then we're currently sitting at about, I would say, 60 to 65%. And usually these triangles tend to realize when we're at about 65 to 70% to the apex of the triangle. Okay, so there could be more time here to kind of look at, right? And now coming down, we're about to print the next buy daily candle, right? So even if we were to fail the support just a little bit, it takes us to a bottom side of the support landing at 86 cents. Okay, and that again, that's that gap. So it's leading to a pretty nice. It's rhyming nicely. It's what I'm trying to say. Okay, and another thing here is, guys, that we're still within that rising wedge. I'm sorry, the ascending triangle here, still getting that profile, that volume profile down lower and lower, right, which could indicate that there is a loss of strength. But remember, this is the monthly chart, right? So it's in relevance to the monthly time frame. Within the smaller time frames, there will be a large ebb and flow within that, right? But it's just the macro perspective is kind of what matters here too, right? As long as we are creating this series of macro higher lows, right, then we are essentially in a good stance. We're getting very close to closing this macro close too, 7 days and 20 hours. I mean, it feels like an eternity away, but still in relevance to the monthly time frame, 7 days and 20 hours is getting close. Okay, you guys. So now let's go ahead and just refer to the RSI as the last part of the analysis here and see what we have for the immediate short term to the medium term, right? So 30-minute immediate short term time frame is finding support from the 14-day simple moving average represented by the pink line. And we are also within the gravitational zone of the bearish control zone. Okay, so the bearish control zone is this red zone and the bullish control zone is the green zone. Okay, so let's go ahead and move on here and see what else we have. So this is the hourly time frame suggesting a little bit of consolidation. It is within the bullish control zone gravitational area here, so that we can actually get a little tiny bit of a push up to the upside, but then that would reject and continue on to the downside. The reason we can see that is because of the bi-hourly time frame suggesting that downside. I get it, we're within that gravitational zone, right? But we can see the curvature of the 14-day simple clearly starting to favor the downside and the RSI signal too. Right, so now another consolidation phase here on the 4-hour time frame, another one on the 6-hour time frame, another one on the 8-hour, and it shows that the 12-hour is suggesting a continuation to the downside. Same situation with the daily. What all of this is saying is that we may actually be on the path to that 86 to maybe 84 cent range. Okay, you guys, so I would like for you to kind of prepare for that. Keep your eyes on your longs. Keep your eyes on the bottom side targets here, okay? But like I said, guys, I would really embrace that reaccumulation phase to allow more bulls who do want to get in this play, to allow them to get in at a pretty discounted price, right? So that we can get a really nice rip to the upside. But remember, guys, first and foremost, that I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, you guys, I wish you well. I wish you a very, very good night, and I will catch you at the bell mañana. Adios.